Hey everyone, welcome back to your weekly market outlook. This is for the 25th to the 29th of September 2023. Now, there is a lot to discuss about last week, especially around all the monetary policy decisions. So let's start with Monday. Last week we have the Australian policy meeting minutes, a little bit dovish. I think they are going to be extending a little bit in terms of the interest rate pause, and then we have the Canadian CPI numbers. A little bit of an improvement in terms of the Canadian CPI, which is good for the Canadian dollars, I guess, not good for everything else. UK CPI, this one here, see a little bit of a drop just before the Bank of England meeting, so 7% was expected. We have 6.8, we had a slight drop to 6.7%. And then we have the FOMC decisions, they pause in September, all right, but the economic projections does point to one more interest rate hike in 2023. I think the surprise would actually come from the 2024 target rate projections. This one here is expecting maybe about 1 or 2 interest rate cut in 2024, but that's pretty much it. I think they're likely to retain the current interest rate for a little bit longer than what the market is expecting, so a little bit more on the hawkish side coming out from the FOMC. We've got the Swiss National Bank, this one here, leaving rates unchanged. The forecast was to an increase of 2% from 1.75%. We didn't get that. We had everything remaining the same at 1.75%. Also the same thing with the UK in terms of the interest rate decision. Market was expecting a 25 basis points hike, didn't quite get that, remains at 5.25%. But if we take a look at the bank votes, the voting itself, it's actually 405, right? So 4 for a change in hike, 5 for just to keep it at a pause there. But yeah, if we take a look at the voting numbers, it's kind of 50-50. We just one man tipping the balance here in terms of the interest rate decision coming out from the Bank of England. So yeah, I think they were doing that last minute because the inflation was coming down, slightly coming down. But yeah, I think it's more of a wait and see situation going forward for the Bank of England. But considering how bad the UK economy has been doing, the data this month in September hasn't been that great. It's been pretty bad actually, so I think it's all right for the Bank of England to remain on a pause at this point in time. Okay, we have the Japanese interest rate decision. No surprising notes here. We didn't get that hawkish tone coming up from Ueda. I think they went back to the dovish stance. So giving the thought that whatever Bank of Japan says in terms of a quiet exit and how they were scaring the market, I think it's more of a verbal intervention just to keep the Japanese yen from being pressured lower. But obviously, we've got the monetary policy statement. Nothing has changed. They're likely going to remain on a little bit more on the dovish note. Ultra easy monetary policy is still going to be in play until the inflation stabilizes in Japan. But yeah, market reacts to it. Market saw that, kind of pressured the Japanese yen down a little bit, but not by much. We'll go through that on the technical side of things. And then on Friday, we've got the flash manufacturing services PMIs from the Eurozone. We've got France, Germany, the Eurozone, the UK, as well as the US. Not much of an impact, I'll be honest with you. The German manufacturing numbers was a slight improvement, 39.1 to 39.8, which is above the forecast, which is kind of the main focus of what the market was looking for last week. And then in terms of the UK manufacturing numbers also picking up, I think what we're looking at here is a pattern where the manufacturing PMI is starting to pick up. The services is the one that starts to come off a little bit, and that's basically the case pretty much for the US as well. Right. So let's take a look at this week. I think it's going to be a quiet week. We do have several events to look out for. I think number one we need to look out for would be on Wednesday for the Australian CPI numbers. Now the Australian CPI numbers is expected to pick up again from 4.9 to 5.2%. We might not get 5.2%, but it'll be interesting to see if the inflation picked up above 5% again for Australia. We've got the German preliminary CPI numbers, but we want to focus a little bit more on the Euro flash CPI numbers. Again, This one here, inflation is expected to come off a little bit from 5.2 for the year-on-year CPI to 4.5%. For the core, expected to drop from 5.3 to 4.8%. But that's pretty much it. We have the US final GDP numbers for the quarter, expecting a little bit of an increase from 2.1% to 2.3%. We've got Canadian GDP numbers as well next week, but I think the focus would come back on the core PCE numbers from the US, which is going to be on Friday. Now, Chinese numbers are going to come out on Saturday, which is kind of a day off for the market, but the manufacturing PMI is expected to be released on Saturday. So I think if there's any strong surprise to the upside on Monday, we would probably expect a little bit of a gap, especially in the Australian dollar as well as the New Zealand dollar. All right, so that's pretty much it from the fundamental side of things. We're not expecting crazy numbers coming up this week. I think what happened last week kind of give market a little bit of a thought, a little bit of a pause, but we do have a clear direction in terms of how do we navigate the market for the rest of the year. Now, let's just jump into the technicals. Technicals are going to be pretty quick because a lot of this are remaining in the same range as of last week. Take a look at the dollar index here. This one here stabilizes above 105.50, but we're not looking at a strong push to the upside. I think this is more of a slow grind towards that 106 level on the dollar index. But overall, this one here is well supported at 105. We're above that 105.50 as well, so that's going to be your immediate support for the dollar index. I think we are still on track towards that move towards 106, but it is likely going to be a slow grind towards 106. Now, Aussie USD remains exactly where it was last week. I could have shown you a weekly chart here, but I just want to give you the daily chart just to give you a little bit of an illustration. But pivot levels doesn't change from last week. We actually are in fact, the only thing that changed is support one kind of picked up a little bit, but it's still going to be around 0.64, which is around 64 cents. So the range is intact. We've got support zones coming in at 63.50 to 63.75. Resistance wise, we've got 65 to 65.25. Price is exactly in the middle right now. We're just hovering slightly below the pivot level, but doesn't really mean much. This point in time, if we take a look at the stochastics, momentum is also flat. So the Aussie USD, I think it's one of the more stable currency, but it's so stable that it's kind of annoying to trade because it's stuck in that range there, in a small range for a prolonged period of time. We basically have been looking at this range since mid-August. So yeah, goes to show it's nearly 1.5 months that the Aussie USD has been trapped in this range right now. That's how it is. We're going to navigate accordingly. We'll take a look at 65 cents as resistance. We're going to be looking at 63.50 as kind of support level for the Aussie USD. Best way to navigate Aussie USD is just to trade within the range at this point in time. Next up, it's Euro USD. So for the Euro USD, if we take a look at the weekly chart here, this is the daily, but the weekly does point out for a little bit of an extended wick to the upside. So there's a lot of selling pressure for the Euro USD. Now, if we take a look at the weekly close, it actually closes below 65 cents. Stochastics remaining flat below 20. So this does give a little bit of an indication that the Euro USD could more or less grind towards the downside. We're potentially going to be looking at a little bit of a grind towards 1.06. Now, 1.07 obviously is now a very strong resistance. That's going to be a cap for the Euro USD. 1.0650 kind of midway. We're looking at a little bit of support to the downside at 1.06. So very similar situation with Aussie USD. This one here is trapped in a range bound market condition, but progressively going to the downside, right? Range currently is at 1.06 to 1.07, 1.0650 as the midway point for the Euro USD. The Pound USD, the fall was so intense, I need to show it to you on the weekly chart. But if we take a look at the weekly chart here, the past 3 candles that we see on the weekly chart does indicate a potentially strong move to the downside, and I think there's still room to go for the Pound USD. Obviously, if we know the candlesticks, this is going to appear as 3 black crows on the weekly chart, which is a strong indication that there is still going to be that downward selling pressure for the Pound USD. Also to note, we have extended below 1.23 level as a support level, so that's pretty much gone. Last week we saw a very clear cut towards that level. This week we might see a little bit of a pullback towards that level, but any pullback towards that level is likely going to be met by selling pressures for the pound USD. So I think for the pound USD, we are still likely going to move forward to the downside. We are looking at the 127.2% Fibonacci extension on the weekly as well as on the daily time frame. This extends to 1.21, so 1.21 is potentially where the pound USD could go, which is also where the support too on the weekly chart is. So I think the pressure is still there for the pound USD. If we take a look at the weekly pivot, it is at 1.23. So ideal scenario would be for the pound USD to pull back up a little bit towards 1.23. Once it meets 1.23, if it becomes a strong resistance, then that's where I think a lot more sellers are going to come in to short the pound USD, shorting it down towards 1.22 and 1.21 in the near future. All right. Next up is the dollar Japanese yen. Again, as I said, a slow grind to the upside. The Bank of Japan remaining dovish, the FOMC slightly hawkish, but we're not looking at this crazy movement here on the dollar Japanese yen. This one here is just hovering above 148. We are currently progressing around 148.50, but take a look at the resistance 1, resistance 2, and resistance 3 for the week. Resistance 1 and 2 is clustered all around 149, so it does give a little bit of an indication that the move to the upside could be very limited, or it could be a very slow grind to the upside. Again, the resistance 3 falls at 161.8% on the daily, which is also at that key level 150, where people are expecting the Ministry of Finance to intervene. So I think that move towards 150 is still a potential, but just expect a little bit more of a slower grind. Support wise, I think we would establish 147 as a very strong support. In fact, last week we didn't see price drop to 147. It was well supported at about 147.50, but just to give it a little bit of a room, 147 is a key support level you want to watch out for on the dollar Japanese yen. 148 would be the immediate support. It's also where the weekly pivot is located, but currently we're still anticipating a little bit more of a grind to the upside. We want to see how market reacts around 149, but ultimately we still anticipate that move to finally approach 150. Okay, the dollar Canadian, this one here was a little bit of a drop below that 1.35 level, which is a key level. It dropped below 1.35 and it breaks that key support level. Market slides down towards 1.33675. This is a significant move for the dollar Canadian. Typically, dollar Canadian doesn't move that wildly, but this one here dropped significantly. This is on the back of that stronger inflation numbers coming out from Canada. But yeah, right now it is doing a little bit of a retracement. It's currently met by 1.35, which is the previous floor. This is also aligned with 38.2%, so we anticipate this level to be a little bit of a resistance for the dollar Canadian. But momentum wise, it does indicate a potential run higher, potentially towards 1.3550 and 1.3575, around the 50%, 61.8% retracement. The overall tone for this one here, it does still indicate a stronger US dollar versus the Canadian at this point in time. Price is still above the Ishimoku cloud, and I think that drop below 1.335, we can see that very quick, swift recovery on the dollar Canadian. So I think a lot of people are looking at this and say, hey, you know what, that's a pretty good discount on the dollar Canadian. So yeah, this is currently picking up. I think we got one more resistance at 1.35. Once it progresses above 1.35, we are likely to see that lift higher on the dollar Canadian. Dollar Swiss, this is on the weekly chart. Again, I just want to show you how drastic the movement is pretty much since July for the dollar Swiss here. So Swiss has been under pressure. Out of the movement, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. We only have one bearish candle, but that candle itself is not even bearish. If you take a look at the formation, sure, it is a red candle, a slight drop, but it's not by much. And if you take a look at the buying pressure, the tail end of the wick, it's so long, it exceeds the previous week's low, right? And the close of last week, we saw a 3 white soldiers pattern. Currently, we're still anticipating the dollar Swiss to continue to move to the upside. We are looking at 127.2% at at 91.50. That range around 91.50 to about 92. That's expected to be where the May-June high is for the dollar Swiss. We anticipate that to be a little bit of resistance, but Yeah, I think we're still on track towards that 91.50 at this point in time. So 91.50, 92, I think there's a no-brainer here. We're not looking at any weakness at all for the dollar Swiss at this point in time. Sure, the overall tone is that the weekly is still below the Ichimoku cloud, but in the short term, currently with how this is going, I think we are likely going to be seeing further progress towards that 91.50, 92 level on the dollar Swiss. Right. Lastly, we've got gold, and gold with that slightly hawkish tone coming off from the FOMC. Obviously, it wouldn't break 1940, 1950. So yeah, key level remains the same. This is still range bound. We got resistance 1940, 1950. Currently prices below 1930. We anticipate 1930 to be the immediate support. But the preferred scenario for gold right now is that once it gets off the Ichimoku cloud, it's currently inside the Ichimoku cloud, we are likely going to track gold a little bit lower, potentially towards 1910. Once the stochastics on the daily does cross to the downside, we are looking at more pressures for gold here, likely pressuring it lower towards 1910, 1900 level. In terms of resistance, 1940, 1950 remains a very strong resistance for gold. So just keep an eye out on this one. This one here is a pretty established resistance range for gold. It has been tested for months on ends, and we can still see the movement throughout August and September. 1940, 1950 kind of acts as the upper resistance. You can see price goes into that red zone there and immediately just fall back down. So very strong resistance in gold, 1940, 1950. So that's pretty much it for this week. A lot of technicals hasn't changed. A lot of them are in a range bound market condition. So I think the best way to navigate the market for this week is to know your range and just trade within that range at this point in time. Maybe in the exception for the pound USD and the dollar Swiss, where we see that 3 black crows and 3 white soldiers on the weekly, which is a very significant indication of, you know, the buying and the selling pressure on those two currency pairs. All right, so with that, good luck to your trades. I'll see you soon.